Hello friends, as promised earlier, this video will be about my biggest holding, Alibaba, at least when recording this video now on November 2nd, 2021. I need to say that out loud because Alibaba is releasing their earnings in 2 days, so obviously I don't know what's coming up there. If there's something interesting coming up, I guess we need to do another video very shortly, but if I would need to guess, I'm guessing it will be pretty much business as usual for Alibaba. But still, let's see what happens in 2 days. Nevertheless, in this video we will go through basically why Alibaba is my biggest position. We will start off by looking at one of the platforms I use and pay, excellent platform by Simply Wall Street, which will give you a kind of an overview on Alibaba. After that, we will check my investment thesis and few points why Alibaba is the biggest holding I have and why do I believe in it so much. And lastly, we will take a look at the risks related to investing in Alibaba and have a little discussion on those. But let's get started with the Simply Wall Street platform next. Let's go. So here we are at Simply Wall Street. Here you can see the domain for Simply Wall Street, so simplywall.st. This is a service I pay for, and I think I will present to you more closely in the future videos what Simply Wall Street can do. But let's now in this video focus only on the Alibaba Group holding page and return to Simply Wall Street in the later videos. As you can see from here, left column, we have the company overview here in front of us. We have 7 different sections describing Alibaba. I feel like probably some are more interesting than others, so we will just skip some of them and I will highlight to you some of them. And I really like the Simply Wall Street service. This gives you a great overview of any company, almost any company listed in the world. And now when we go through this Alibaba example, you also see Simply Wall Street, how the website works when looking at a company. So I'm gonna save some time and not describe to you again what Alibaba is. For that, if someone watching this video doesn't know Alibaba's business, I suggest you go and read from their website, for example, what is Alibaba about, and come back to the video then, but let's go for now. Here you have a snowflake analysis of the company. We will get into that also in later videos, but this is a great representation of 5 aspects of a company that Simply Wall Street also produces. But anyway, let's go. We can start by looking at what has happened recently with Alibaba stock. As you can see, this is the last 5 years. We had a huge run up before the year 2020, and the stock went over $300. And since then, we have had a big decline back to 50% decline to 150 almost, little bounce back recently, and the stock stands today somewhere around 170. So what has happened last year? There's a big, as shown to you, there's a big decline, and this is because of, I would say this is only because of the bad news sentiment, bad coverage on Chinese stocks, Chinese tech stocks. And actually, not much has happened with Alibaba's business during this time. It has continued its good growth, but the stock has been quite irrational sometimes. For a huge run up and then a big down. And we are still down quite a lot for the year. And as said, I feel like this is uncertainty, fears, news sentiment that is causing this. But as you might already expect, in those kind of situations, you are able to find good value and undervalued companies when the market is behaving irrationally. So that's what happened with the stock. Let's continue forward to the valuation metrics here. This is Simply Wall Street's own valuation table. They ended up with the company being today 41% undervalued. I do agree that it's undervalued. Myself, I think it's even more undervalued than that, to be honest. There goes quite a lot behind this valuation model here. We will not go that through now. Just show to you that also Simply Wall Street, which takes analyst estimates of the company, average of many analysts, and makes their... Actually, I can show you quickly here the data. They make their two-stage free cash flow to equity analysis. This is the valuation model, and lots of that stuff goes into this, but we will not get to that now. Just so you know, they also feel or end up in the result that the stock is undervalued now, and I agree. Price to earnings ratio 20. I would say that's low for a company like Alibaba. We move a little bit forward. Here you also see what else is available on Simply Wall Street, but we will not be too interested in those now. We go to the future growth section. This is the past, obviously, and from here starts analyst forecasts. What you might want to say from this one is that they're expecting, and me too, I'm expecting the revenues to continue their massive growth. The earnings, not so much, but then again, anyone who has been following Alibaba knows that they are kind of sacrificing their profits at the moment to grow. And with a company like Alibaba, that's probably a wise decision to do. We have some analyst future growth forecasts here, but not getting to those at this point too much. What else would be interesting to show you here? Well, here we have the past performance now. We come here to the third section, past performance, earnings and revenue history, and as you can see, there has been a major growth in the revenues. Earnings, again, not so much, and I'm expecting the situation to continue like this for the foreseeable future. Moving on. We can now skip to the financial health part. As you can see, short-term assets more than liabilities, long-term assets more than liabilities, so all good here, I would say, and the debt level of the company is very low, 13.6%. No debt, not too much. I would say debt not a risk for Alibaba at all. Here you can see the balance sheet. Dividend, well, Alibaba doesn't pay dividends, so not much in there. Here, if you're more interested in Simply Wall Street, you can find out about the CEO, find more information on the leadership team, and as well as board members, and how long tenures they've had, and information you see here. But nothing special there that I would like to highlight now. Not usually, I'm not sure if this is problem with Chinese companies in the Simply Wall Street, but if usually you can see very valuable information here on insider trading volume, which is definitely a thing I want to monitor myself. If their insiders are selling or buying the stock. Unfortunately, we don't have, Simply Wall Street doesn't have the data for Alibaba here. Not sure why, but I guess there's some reason for it. Ownership breakdown. Well, obviously it's with any stock, it's nice to see that the shareholders have not been meaningfully diluted in the past year or at any point. So no more stocks issued. You can see how the ownership breaks down here. Nothing too special in here. And here you can see the top shareholders. Again, 25% SoftBank. They are the major owner of Alibaba. Not any implications to my investing, but just showing that to you just as an information. And yep, that's... Then you can find data like number of employees, some location information, and that's about it. There you got an overview to what you can find in this company pages from the Simply Wall Street very quickly. Nothing too special in this case from Alibaba's side, but we highlighted some points for you there. But let's next turn our focus to my analysis on why I think Alibaba is so good, why it is my biggest position, after which we take a look at the risks, and for sure we will use the Simply Wall Street in the future more, looking at other stocks, but as this was the first one, I just wanted to show you the service I'm paying for, and I'm happy using it. I have no, they are not paying me any money to market Simply Wall Street. I'm just a happy customer. I'm not getting any money of highlighting their company here. It's a great website for screening stocks, finding stocks, and having like a first look at any stock, what it is about, what is special in that company. And there is also lots of other features in Simply Wall Street, but we will look at those more closely in the videos in the future. Now let's go back to the presentation on Alibaba. Okay, let's then go with the presentation. First, we take a look at the investment case for Alibaba, my biggest holding when recording this again, and then we have a short discussion on the risks. Firstly, I want to say that Alibaba is a widely discussed stock in the circle I follow. Here from YouTube, you can find at least 3 excellent YouTubers and people who really know about investing, in my opinion. Investing with Sven Carlin, Investing with Tom, and New Money. Those are the name of the person's name of the channels. I'm sure you find them when you type them into the YouTube search bar, and all of these 3 have excellent videos on Alibaba, and I have to say I do agree with pretty much everything they are saying about Alibaba, so I encourage you to take a look at their work too. Basically, I'm not presenting much new in here, just shortly summarizing, in my opinion, the biggest things with why one should invest in Alibaba, why I have been investing in Alibaba, and these YouTube channels right there helped me a lot in researching this stock, so I wanted to give credit for those persons about this. So let's start with the first point. Super investors have been buying Alibaba. Let me show you another great website in this video called Dataroma. So we are here at dataroma.com. Among other things, this is a great website to see what so-called super investors of the world have been doing with their portfolios recently, or more specifically in the quarters. And when using this website, one must remember that they are not publishing this information on what they have bought or sell in real time, but after a period of time, a long period of time after they have already done those transactions. So that's a good thing to keep in mind when looking at these always. But we will take a more close look at Dataroma surely in the future. But what I wanted to show you now is the landing page and information we find already from here. Here you can see the super investors who they are following in this website. Lots of them, lots of great names in there. But right here in the right hand column, we can see some portfolio stats already. From top 10 most owned stocks, you sure recognize some familiar household names there, but top 10 stocks by percentage, you can already see that Alibaba has climbed up to this list already. And what is even more interesting is top 10 buys last quarter, Q3 to 2021. Alibaba is number 1 in both of these sections. And when looking at the longer term, last 2 quarters, Alibaba still number 1 in both of them. So super investors have recently been buying Alibaba a great deal during the time, basically the last year when the stock has seen its decline. And when we click Alibaba here, we can see who are the super investors that have been buying. And what is the most interesting thing is that I like to look at myself, not really pay attention to these guys who have only under 4% of their portfolios in Alibaba. But what is more interesting is what is happening here with the guys who have around 20% of their portfolio in Alibaba. And as you can see, there's Greg Alexander reducing a bit, but still having a huge exposure to Alibaba. But then, I have to say, I don't know Greg Alexander that much myself. But then, two persons I do know are right here, Monish Pabrai and Charlie Munger. And especially Charlie Munger was, I would say, a big shock kind of in investing world when it turned out that he had invested a great deal to Alibaba. And what happened since the Q1 he invested first time, if I'm correct, that was Q1 this year. Might be that I'm wrong, but not the point I'm making here. If I'm sorry if I was wrong there, but my point is that last quarter, when Charlie Munger first bought Alibaba stock and it went down even more during the last quarter, Charlie Munger almost doubled his position. So when the stock price declined, he saw even a better deal here and bought again a big amount of Alibaba stock. And as you can see now with Monish Pabrai and Charlie Munger, they have approximately 20% of their full portfolio in Alibaba. So that's definitely a thing I pay attention to, what these super investors are doing. I'm not copying them per se, but it's always nice to know if some big names have been buying the same stocks during the same times as you have, roughly. And I have been owning Alibaba for already earlier than this year, but then when the stock declined, as we saw earlier, during this year even more, I keep adding Alibaba to my portfolio basically until it was my biggest portfolio as it is now. So this is what we can find from Dataroma. Very interesting website. We'll return to this later, but let's now return back to the presentation. And we are back at the presentation, and point number 2, the triangle of Alibaba. Alibaba has a strong position in Chinese e-commerce market and is expanding internationally. That is the platform. Then Alibaba owns 1/3 of Ant Financial, whose product is Alipay, used by hundreds of millions of users, a leading digital payment platform in China. That is the payment method. And thirdly, they have, and now I apologize to any Chinese-speaking people watching this video, I don't know how to say that name, Cainiao or Cainiao Logistics Services, sorry for that, and that is the logistics. And when you have control over platform, payment and logistics, you have control over the whole consumer experience, and that enables you to deliver the best consumer experience. So a big thing for Alibaba there. And then we go to point number 3. Alibaba is a spawner. By spawner, we mean that it has the ability to create new businesses in its own ecosystem, and lots of them. So they have a big ecosystem already. Alibaba is an ecosystem company, and they can just inject even more services to people in their own ecosystem, which makes the whole ecosystem better than it was yesterday. So a spawner quality in a company is rare and can be very valuable if done correctly. Point number 4. Their cloud business is growing. It's at the moment, I guess it's pretty much in the stages of break even, but it's growing and surely will become profitable also in the future. Much like the Alibaba cloud business can be compared to Amazon's AWS, I guess. And as far as I know, it's pretty much about the same thing they are doing there. 5th point, well, this one we already discussed. The stock price is down because of sentiment, because of fear, because everybody sees just fear and bad things around Chinese tech stocks. And when a stock starts to decline, as a result, ETFs and funds start offloading it because they cannot hold losers in their portfolios. They will lose customers. This makes the downward spiral even stronger. And the stock price goes down, but this has nothing to do with Alibaba's underlying business itself. This is just stock price going up and down. no effect to Alibaba's business whatsoever. So this, I feel, has been causing good buying opportunities during this year 2021. 6. With Alibaba, you get exposure to rapidly growing middle class in China. That's a macro tailwind. And finally, 7th, Alibaba is exporting Chinese goods and serving Chinese people, thus creating happier life for the Chinese. Thus, the mission of the company, Alibaba, aligns with Communist Party's goals. And this is different from other Chinese stocks. For example, if you are familiar with what happened this year with education industry stocks from China, they crashed, and basically how I understood the situation was that they were basically selling their services to parents of the Chinese kids, that they can do the tutoring, they can do the teaching better than the public schools, or kind of you are not going to make it only with public school schooling education, but you need their services, kind of a little bit undermining the public school system in China. And as you might guess, this was something the Communist Party didn't like in China, so that ended up really badly for those education stocks. But with Alibaba, I'm not seeing this problem or this kind of scenario happening, because Alibaba is doing good in China, a great deal in my opinion. So these were the 7 points, big things I think are tailwinds for Alibaba in the future. But let's now turn our focus to the potential risks in investing Alibaba. First, there is the VIE structure. That means variable interest entity structure. Basically a structure, you can Google it and read more about it. Just very shortly, I state that it's kind of a way for international investors not in China to buy Alibaba. Basically, you are buying a shell company in Cayman Islands, not the Chinese Alibaba company itself, but with that shell company in Cayman Islands, you are entitled to the profits of Alibaba. So yeah, basically, if Chinese Communist Party decides that the VIE structure is there no more, you will basically potentially you can lose all your money just instantly. They could do it, but will they do it? My personal opinion is that I don't see this as a big risk, because that would be such a major thing for Chinese government to do, to steal in international investors' money, that who would anymore like to invest in China in the future? Who would trust Chinese government, international investing wise speaking? I don't think anyone will, and I don't see this would help China at all in reaching their goals. It is possible, but I'm not seeing it as a likely scenario, because I don't think that would do any good for Chinese Communist Party or China to do this kind of a trick to international investors. And as Monish Pabrai, kind of relating to the subject, or actually let me correct that one. That sentence doesn't really relate to what I just said there, but this Monish Pabrai quote here relates to the Common Prosperity initiative by the Communist Party, where Alibaba is to donate a certain amount of money in a certain amount of time to projects in China. Project which actually I just learned that kind of even relate to Alibaba's business pretty closely. So they are not just any projects, but actually relate to the company itself. But anyway, this Common Prosperity, you might also call it some kind of a tax on Alibaba, and you might say that this Common Prosperity is kind of a permission to conduct business as usual with Alibaba. I consider it myself kind of as a tax. And to this, Monish Pabrai said that Alibaba is a crown jewel for China. These are the place with possibility of global footprint. Government will not take an approach that will kill the golden goose. With this, Monish Pabrai means that the Common Prosperity thing was kind of a way for Chinese Communist Party to show who is the boss. They are, and took a little tax of Alibaba, but they will not keep doing that kind of stuff too much in the future, because if they would be hurting Alibaba's resources, Alibaba's business, and as said, that would kill the golden goose that is Alibaba here, and China doesn't want to do that. Alibaba is one of their truly potential global players in the future, big companies that can have a big footprint, not only in China, but also globally around the globe, the whole world. So Chinese government will not kill their golden goose. I believe that. You can have something like the common prosperity initiatives happening in the future, surely, but I do believe strongly that the Communist Party in China wants Alibaba to succeed. Number 2, delisting from New York Stock Exchange. If it happens, stock probably goes down. It will have those kind of effects, but then it can be bought from Frankfurt maybe still, or at least in Hong Kong as far as I understand. So when there are ETFs or funds that need to offload the stock will probably crash. But if you have a way to buy Alibaba stock somewhere outside New York Stock Exchange, could that be actually an opportunity to buy more of good stuff with even cheaper price? So this would actually be an opportunity, not a risk. And yeah, it depends on how you look at the thing. But again, that kind of delisting would have nothing to do with Alibaba's business. It just would make the stock price go down again, like with the bad news sentiment, with fears on fear circling around Chinese stocks, Chinese tech stocks. That's fear playing with the stock price, but not the action of company itself. The company is still the same as it has been before. And finally, third point, third risk around and thing that is pressing the Alibaba stock price, or has pressed this year down, the US versus China conflict. The rhetoric between the two countries is pretty bad at the moment. Obviously everything is possible, but in a war/trade war there are only losers on all sides usually. So all we know that anything is possible in the world, also wars. But then again, if we talk about a full conflict war between China and US, I guess that will have so big effects on the whole wide world that your Alibaba stock is not the only one taking a hit at that point, and I don't even know what would happen in the world if that kind of day would come. But then again, will that kind of day come? Everything is possible. I do not believe that there would be any conflict as a war between US and China, because we are talking about the two major economies of the world, and that would have so would have so bad effects that I don't even want to start thinking of those, what would happen in the world if this kind of things would happen. So again, that would be a major impact event, but how likely is that event? So I don't think that kind of conflict, that kind of war is likely between the two nations. So there you have it, the Alibaba stock analysis. What do you think of Alibaba as a company, as a stock? Let me and other viewers know down in the comment section below. And if you like this kind of stock analysis, I promise you there will be more coming up. So subscribe to the channel so you won't miss out. Thank you for watching this video, and see you in the next video. Bye bye!